The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We got to change strategy a little bit today, folks, because there's a major news breaking announcement. You're not going to believe this. The Federal Reserve has put Deutsche Bank on the dangerous watch list. Folks, this is really sad because when you stop and think the power that the Federal Reserve has, and now they put them on a dangerous watch list. I mean, hello. I mean, goodness gracious. I mean, there had to be somewhere in that chart that said, gee, maybe something's not right here. Of course, the stock is up today now that the cat is out of the bag. This stock has still got trouble, in my opinion, but let's remember one thing. Whenever you see something that looks too good to be true, chances are it is too good to be true. When they were offering that stock in January at $21 a share with a 35% discount, boy, what a deal that was. And look at it now. So they gave it to you at 17 and you've only lost 70% of your money. Such a deal, darling. What are you going to do? Anyway, let's pay attention to that in the future in case it comes up again. It's it's even higher by 2%. It's trading at 1068. I wouldn't surprise me because they figured that the cat is out of the bag now and everything's going to be okay. It looks just like Lehman Brothers. You're right, Marshall. If you look at the chart, I wish I had my old Lehman Brothers chart because it looked the same way. I remember Lehman Brothers very well because it was trading, I believe, at 16 and had a perfect 3 drive to a bottom pattern. Oh gosh, it was so symmetrical you couldn't do it. And I just been doing the radio show a very short time for TFNN, and I said, gee, this is a really good buy with a very, very low risk. And that stock gapped down $0.50 that morning on the open, and it never looked back. It went, tapioca. And I immediately, when I saw that, I said, oh dear. I said, this is really serious. And anyway, cut the loss really short. But anyway, that was then, and this is now. Let's take a look at the DAX index. We've completed on the daily chart. We've completed a nice little pattern here. We have the Gartley pattern, of course, just a tad below the 61% retracement. We've had a little bit of a rally. Hasn't been, too much, but at least it's held the bottom pretty well. But the one that's interesting is if you look at the FTSE on the daily basis, on the longer term, which we haven't looked at in quite a while, you'll notice that you're going to be seeing a really nice Gartley up there at the 382, and we've had, 4 days of rally. We saw that on the hourly that we looked at yesterday, but the daily shows it very quickly that was a 382 off of that low way back on the on March 23rd. So that's still a pretty bullish pattern. Now we will be fulfilling a 135 pattern on that probably over the weekend. I believe the holiday is going to be on Wednesday this year, so that means Monday and Tuesday are going to be pretty slow, folks, because in fact that whole week of Independence Day will be very, very slow because people are taking time off, and it is historically a pretty slow week, so we'll need to do that. The key thing, by the way, we have Stan Harley as our guest today. Always, great to talk to him, and he's, of course, was bearish at the beginning of June, and here we are at the end of June, and the market's been down pretty good. But let's take a look here what we have going in this crop report that's coming out today. Rich Anderson was kind enough to send this to us, but it just shows you that the volatility that happens around this this report that's coming due today around 11 o'clock, I believe, Chicago time. So it's going to be really pretty wild. My recommendation is, of course, to wait, till after the report and to see what's happening. We've got a lot of hot weather coming in again in the Midwest. The heat index in some areas is well over 103, 104, and it's going to be 92 in New York City for the next few days, which that shouldn't affect the soybean crop too much in New York City, but there haven't been any reports coming out of there on how the crop is doing there in Times Square, but we'll check it a little bit. No, a dry heat is down here, David. we were 106 yesterday, and that was, but you know, it actually, as long as you hydrate yourself and, you know, put your sunscreen on, it's really not very bad. I mean, it really isn't. It's, you know, it's really nice. Today's going to be 99. We haven't had any monsoon rains yet. They were supposed to do on the 15th of June. And they usually go through June, July, and August, but we have not had any of those as of yet. So we'll keep an eye on that as we're looking. Let's take a little snapshot here of what we see going on in the markets here. Here's where we were in that S&P yesterday when we were talked. We were right down at that 1.27 expansion level. It hit that level at 2690, I believe, was the low in the S&P. And then, of course, it had a very, very strong rally. And the rally has continued on, you know, through this morning. But if you'll give me a second here, I will get this chart up for it so we'll be able to see it. Oh, that's not it. Give me a... Oh, dear. Come on, Larry. You had it up here. Boy, oh boy, I'll tell you, you know, I'm going to have to turn in my chart pencil because I had this thing all ready to go and it's disappeared on me. Doggone it. What in the world happened? Ah, here it is, I think. Ah, no, this is, yeah, there it is. Here we go. This is it. It's very important, folks, because of where we are. I just want to give you a heads up. This is my interpretation of this. Okay. Here is the S&P. Here's what I'd like for you to look at. Look at the period between the 25th and the 27th. You'll see that ABCD structure. The market went from 2702 to 2747. It rallied 43 handles. Okay, what did it do yesterday? Look at that same ABCD pattern. All it's doing is just showing you the distance. It did exactly the same, and it stopped right at the 78% level. Folks, if we can clear 2740 in the S&P, this is not going to be a bearish chart. Until that happens, this is still a bearish chart. It's nothing more than the same rally that we had between the 24th and the 26th. These are how markets act. We've had two perfectly symmetrical rallies, one between the 25th and the 27th, and the other one between the 28th and the 29th. Now, if we can get above that 2740, then you've got game and you've got a really good chance of doing it. But until that happens, you know, that's not going to be the way it's operating. So we'll keep an eye on that. The NASDAQ has got to get above the 7100 level, and then it will have a chance. 7110, I believe, it will have a chance. And the Dow Jones E-mini futures need to get above 24,600, and that's 260 points away. So that's a really hard one for that to occur. So we'll see if that's going to be in the cards for them today, but we'll watch it. I guess we've got a break coming up here pretty soon, and we'll get back. We'll talk about the euro a little bit and also the treasury bonds.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we want to talk a little bit about these Treasury bonds. We're still trading up here at this 145 level. As you can see here, this is a long-term chart, and that 382 level is setting right there between 145.5 and 146. We might go up there one more time, but I don't think we're going to get much higher than that 146 level. Maybe take it out by just a little bit, but this is still a very bearish chart. It means basically that interest rates are going to be going higher rather than lower, and we'll see if that continues. But this is probably the most bearish chart of any of the charts that we're looking at, recently, because it just really doesn't have many friends. Now, it's had a pretty good rally here for the last 3.5 weeks, but really that has not been, very much at all when you look at it that way. Now, if we take a quick look at the euro, and we were watching this very closely, of course, because we did have a really nice 61% retracement up there on Thursday. Excuse me, let's try that on Tuesday. And we came down hard, and here we hit coming into Friday. We've made just a tad above the 61% retracement here at this 116.55 level. Whether that holds or not, we'll have to wait and see. Now, there's a possibility because of the holiday coming up, and we're going to have thinner trade. The market will move a little more volatile during a thin trade. You could have an ABCD structure here in the euro from the 21st of June, where we were at 115 and change, up to the 117. So that's 2 points coming down into 115.20. You add, even money to that too. It would take you back to that 117.20 again, testing the 61% retracement one more time. So that's what it looks like. Now, whether that's going to happen or not, I don't know. The key is it's got to clear this 116.80 level, and then it will have some type of a really good bottom in. And right now we're trading at 116.46 exactly, at the 61% retracement. So there's not really too much to say about that. Now, we've had a big move in the Canadian. We went up there and tested those old highs yesterday at 133. We got up to 132.86. The old high had been 132.84. Had an order in at 132.90, still was not filled, and now we're trading 200 pips below that level. Just totally, broke down yesterday and continuing today. So that tells us that that Canadian dollar is still under the pressures of the tariffs, if in fact that's what it is. We don't know what the fundamental reason is for this going on like this, but could be it. Now, someone's asked a question about the copper, folks. The copper doesn't look very good. I just, we highlighted this in the newsletter last week because it was very important. But look at copper. When we were right there, this was where we were Friday. We were trading at 303 in the copper, and we had to say that was last support. And the reason why is, look at this. You're coming down hard for 2 straight weeks from 332. You're stopping right at 303 on a Friday. You've been there for 3 days. The low had been exactly 303 for 3 days. Now, what would you think would happen if it opened below 303? Yes, you're right. More selling comes in. As soon as it breaks that 78% level, down she comes. And we've broken below 295 easily. So this tells us that we're heading down. Most probably, and this is just, my 2 cents worth, is either to 285, which is the 1.27 expansion number, or down to 272, which is the 1.618. Now, the 1.618 would get my vote, because if you check the 1.618 number at $2.72 per pound and draw a line over to the low when we made the 382 retracement in April of last year, that's going to be a 78.6% retracement of that whole move. And if that's the case, then you've got game, because you've got several good ratios. You're still in a long-term uptrend, and that would be a good place to looking at the long side of copper. But buying it on Monday was certainly not the thing to do when it gapped down. It would be similar to the story that I just said about the stock for Lehman Brothers, because when it broke below, I forget the number, I think it was either $19 or $16 a share, it gapped down $0.50 that day and never looked back. I mean, it was immediate. I sent out a quick fastest newsletter I could ever send out, saying, get out of this, because this is not right. It broke all those beautiful numbers, and that just told you that there was something not right in Denmark or Sweden, one of the two, and we'll see how it ends up. But that's what you've got to be watching. Regarding the continue short scalping, intent to find it. I continue short scalping. The Canadian. I think the Canadian's heading towards. Oh shucks, I don't even have the long-term picture on that Canadian dollar. I wish I did. Let me take a quick. Maybe I do. Yes, I do. Hold on just a second here, Mr. Z. I can get it up here for you. Here's the Canadian. We're now trading below 32. We're 131.90. So the first place I would look for support there would be around 130, 130. That's the old high from March. Okay, that would be a 382 off the low in April. Okay, and so I would watch that level very closely. 3130s would be the key level, because they have a tendency to go back and test those old highs for some reason. But again, we doubled up and went right up to that same high again and came back down again. Boy, that was really saying that it was in trouble. But I would say 131.30 would be the level I would look at, Z, because it doesn't have much else in there. Beside that, there's so many others that look interesting, and one that is really interesting, folks. Here, let's just take a quick look at this. This is one you really got to have on your watch list, because it's in the news almost all the time. This is the British pound on the weekly, and you notice we've had this ABCD structure lined up here for a couple of weeks on our weekly letter, but you'll notice that we are getting close to this 129.05 level. We're only about 120 pips away. And that will be a 61% retracement of the whole move from after the Brexit debacle. So that would be your first place to really take a quick look at that, because that'll be interesting. You notice that it made the 50% level and rallied 250 pips and then gave it back really quick. Well, it's doing the same thing this time, because we're trading substantially below the 131 level, and so we're heading towards that level of 129 129.20 to 129.10, it looks like, on the British pound. This is a real interesting one. The only thing that would make this difference would be if you had a beautiful ABCD structure between April and June, and we don't have that. So you've got to use, what God gives you, and she's given us just this. So we got to be watching 129.10 to 129.20 here to take a look at it. We're going to have Stan Harley coming up in a little bit with some of his great insight into the markets. The award-winning Mr. Harley will be with us. And when we get back from the break, we will ask him some questions about where do we go hither and yon. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks. We've got our good friend Stan Harley on the line. Stan, how are you doing?
Good morning, Larry. I'm just doing awesome.
That's good. I wish we didn't have computers. I wish we could go back to the days of the commodity perspective charts and the old T1 calculators, because I'll tell you, I lose more darn emails in this computer than anything. I don't know what happens. They just disappear on me, and where they are, I guess they're out there in Never Land. So anyway, Stan, you nailed this thing for June. We have to, give you your gold star for this month, because boy, you really had that going in the right direction. You want to give us an idea of what you see coming in the future here? Get that old crystal ball out.
Well, Larry, thank you. I think broad perspective, I think we're in a large trading range. It's probably going to last into the early part of October. We have an interesting environment here. It's kind of a bifurcated market. We've got strength in the small caps, as evidenced in the Russell and the NASDAQ, but the New York averages are languishing. As you and I have talked previously, we saw this similar environment back in 2011. From the May high of that year into the October bottom, the markets trended generally sideways. From top to bottom, the New York averages went down 20%. But during that time period, the NASDAQ went to a new all-time high, as did the New York Advanced Decline Line, which is something that's exactly what's transpiring right now. You've got strength in the Russell, you've got strength in the NAS, both recently at new all-time highs. Yet the New York averages are languishing, and coupled with that, the New York Advanced Decline Line going to a new all-time high. So, Larry, I think we're in a choppy, challenging environment. I think buy and hold from the long side is probably going to prove quite frustrating. I think buy and hold from the short side is going to prove equally frustrating. And I think what you and I and our listeners and investors have to do is manage these trading cycles that you and I talk about a lot, and that's probably the best we can do. Until then, you're just going to have to be patient. You're going to have to anticipate small gains, maybe some small losses, but the bull market express will be back, but I think that probably won't recur until about the second week in October of this year.
Okay. Now, Stan, I had several people, since we announced that you were going to be on the show, they referred to a July 9th time frame that you said in the last time you were on a few weeks ago. Is that still about right? Because that's right after the holiday, and is that the correct date? Because I didn't I didn't write that down, so I don't know. Was that the right time you were looking at? Was around July 9th?
Well, since we were on the air, I've modified my views a little bit.
Okay.
Not a lot, but just a little bit. From the trading cycle perspective, Larry, going back the last 2.5, 3 years, the cycles have been averaging about 31.5 trading days. So if you look at let's say the most recent low on May the 3rd, prior to that April the 2nd, prior to that February the 9th, and so on, going all the way back to the election lows of 2016. These trading cycle lows have been averaging 31.5 trading days, and the standard deviation on that is about 4.5 trading days. The next occurrence in that 31.5 trading day rhythm was due ideally June 28th, which was yesterday. So could yesterday have been that low? It might have been. My Fibonacci work was pulling that over more towards the first week in July. But what I'll say is this: I think we're darn close. Either we have seen the low or we're going to see it in the next several days, I think, a trading cycle low. And then I think we're going to push back up towards the upper end of the range, but I don't anticipate the New York averages busting out to new highs, not yet.
Okay, that's really interesting because it certainly fits nicely. When you look at this 31.53 trading cycle that you have there, my goodness, it just lines up. Now, we have a question from one of our listeners, Stan, regarding the standard deviation. You said it's around 4 days?
Yes. Yes.
Now, you use trading days. You don't use calendar days, as I recall. Is that correct?
I use trading days, Larry. Yes.
Okay.
Almost exclusively. Yes.
Okay. That makes good sense. Now, the other question that someone's asking is, you've already mentioned a little bit about the divergence that we're having between the NASDAQ and the New York Stock Exchange Index, and I think you just described the question that he asked, and that is that the big divergence is basically due to the NASDAQ and the Russell, because the others are not they're not conforming to the bull market, are they?
No, the small cap stocks, as evidenced by the Russell and the NASDAQ, are behaving quite strongly. Yet the New York averages meaning the Dow Industrials, the S&P 500, the Dow Transports, which, by the way, were down yesterday, and the broadest index of all, the New York Composite. I look at all of those and kind of put them in the mix. I look for confirmations or divergences. They are all languishing relative to the NAS and the Russell, just like back in 2011, as I pointed out earlier. So bull market is not dead, but it's taken a summer vacation right now.
Yeah, it's certainly taken a vacation. That is absolutely for sure. Now, the other question that I wanted to ask you, and that is about the bond market. Now, I know you do some work in the bonds. Because usually the bonds and stocks will sometimes go in opposite directions. Do you see anything here in the bond market that would give us a clue of something happening?
I think the bond market has probably put in a low. The yield got up to about 3.1, 3.12. I don't have the chart in front of me at the moment. I'm going from memory on that one. And that has contained the yield chart several times, going back several years. So I don't see bonds going any lower. I will point out the following. That is the ETFs that track the bonds. My favorite is TLT. While the bond market has made lower lows over the last few months, the ETFs, the tracking ETFs like the ETF, like the TLT, I mean, have not gone lower. That's a divergence. That's a bullish divergence. And in fact, the TLT has put on a head of steam here of late. It got down to about 116 and change. Now it's back up around 121, 122. I haven't checked yet to see where it opened this morning. But I'm very positive on the bonds. And are they going to go skyrocketing here? No. Probably going to have to do a little back and fill here near term. But I think a couple, 2 or 3 months from now, I think you're going to see bonds higher, TLT higher, and interest rates lower. Interest rates lower, Larry.
Well, that makes good sense. Now, the next chart that we're going to cover after, we've got to pay a few bills here for TFNN, but there's a really interesting chart that you have in your letter about Fibonacci expansion patterns and market lows. When we come back from the break, I'd like for you to explain to the folks the theory behind this and how you arrive at these numbers. If you don't mind, is it proprietary or would you be able to discuss it?
Oh, we can discuss it, absolutely.
Okay, let's do that when we get back from the break. And my question is, how are you doing with your first summer here in Arizona?
Doing awesome, just awesome.
It's a dry heat. It's a dry heat. Okay, we'll be right back with Stan Harley of the Harley Stock Market Cycles. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley, and he's going to describe this Fibonacci expansion pattern of market highs and lows. And folks, I would pay attention to this, because if you believe in harmony and Fibonacci numbers, there's something there. And as you can see, just by looking at this chart, boy, they have some tremendous hits on this. Go ahead, Stan. Show us what you're looking at here.
Well, first of all, as a backdrop, I would just encourage our listeners to take a look at this 31.5-day cycle. Kind of give you a broad picture where the trading cycle lows are likely to occur. And just start with yesterday. Let's assume for the moment yesterday was the low, and add 31.5 days to that, and just keep track of that. And you'll find the next cycle low is due in the vicinity of August 13th. The one after that is due in the vicinity of September 27th. And generally speaking, that works pretty well. The majority of those occur within about 4 trading days. Sometimes it's been off by maybe 7 to 8 trading days at the most. But over the long haul, we've been averaging 31.5 days, low to low. Now, with that as a backdrop, let's try to see if we can fine-tune this a little bit. And what I've done is I've found, just by hunting and pecking, I found a very interesting Fibonacci expansion pattern. If we start with the January 26 high, and we count forward Fibonacci trading days, and keep a little column, we'll take those numbers and multiply by 2 and by 4. So, for example, the Fibonacci counts are 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and so forth. In the second column, multiply those by 2, and the next column, multiply by 4. And add those trading day counts to the high, the January 26 high, and you'll find in every case, all of the lows have lined up with those trading counts either multiplied by 2 or by 4, in most cases within 2 trading days. If yesterday was the low, it came within 4 trading days. So, for example, the February 9th low occurred 10 trading days after the January 26 high. Fibonacci 5 times 2 equals 10. The low on, for example, on April the 2nd occurred 44 trading days after the high. 21 times 2 equals 42. Well, there it is again within 2 trading days. The low on May 3rd occurred 67 trading days from the January 26 high. Fibonacci 34 times 2 is 68, and so on. So an interesting pattern. So take a look at the fixed trading day cycle count that I just talked about, the 31.5 trading days, and then overlay that with your Fibonacci analysis, and that'll get you within a time window in which you can anticipate these trading cycle lows. And then couple that with some indicators that measure price velocity, price range, whatever your favorite indicator basket is, and then you've got some technical tools there that can help you a lot in understanding what's going on.
Wow, that's a PhD in Fibonacci analysis, Stan. I really think that's really cool. I'm going to have to start looking at that myself. Let's take a look at the. You do a lot of work on the advanced decline line and stuff, and what are you seeing here as far as market breadth and stuff? Because I know we've had a, market, the volume is way down and stuff. So are you seeing anything that is concerning or interesting?
Larry, I don't find volume to be that useful as a tool. Some people do. I've looked at it extensively, and I just find that volume is kind of nice to know, but from a technical tool, it doesn't aid me a lot. But I do like to take a peek beneath the hood, so to speak. That's the kind of the cool thing about the stock market is we have some things in that market that other markets don't have. We have it, for example, advances and declines, new highs, new lows, unchanged issues. I keep an advanced decline line. That's calculated by just maintaining a running summation of each day's net difference between advancing issues and declining issues. So in one column, I put the advances. Next column in my spreadsheet, I put the declines. Subtract the two, and then just keep a running tally of that. Add it up day by day by day, and you get this line that technicians call the advanced decline line. And that just recently went to a new all-time high, by the way, which is generally indicative, and I use that term in italics, generally indicative of a bull market because it's going to a new high. I also take this exact same data, and instead of adding it up day by day by day, I compute both a 10-day and a 30-day moving average of the same data, plot both of those on the graph. And that oscillates above and below zero and gives me a pretty good sense of when the market is, quote, overbought or oversold. Recently, the 10-day moving average was below the 30-day and coming downhill, which coincided, of course, with this decline that we've been seeing here for the last couple of weeks. And I haven't made the calculations for today yet because we just opened a few minutes ago. But if that is starting to turn up, then that would reflect a new buy signal. And the same thing with new highs and new lows. That also tells a similar picture.
Well, we're starting very strong today. We got the Dow up a couple hundred points, the NASDAQ up 45, and the S&P is up 16. So it's certainly moving in that direction, that's for sure. Stan, let's take a quick look here at these world indices because some of these look pretty positive, don't they?
Interestingly, well, the bull market is not just an American thing; it's worldwide. Notably evident in Europe and Australia and Canada. Curiously, the European indices have been quite strong of late, and that's not reflected in the American markets. Generally speaking, over the long haul, they tend to move in lockstep tandem. Particularly the UK market and our market tend to move together. I would point out the British index went to a new all-time high here about a month ago, not reflected in the U.S. indices. But generally speaking, the European markets have been quite strong. The DAX and the French CAC have lagged a little bit. The British index has been strong. The Toronto TSX recently went to a new all-time high. And the Australian index also has poked its head up in new recovery high ground as well. So we've got some catching up to do, but I think, as I said earlier on the broadcast, I believe we will not see the New York averages bust out to new highs until sometime in the early fall. I think we're going to be in a broad sideways trading range until that time period.
Well, my friend, I want to thank you for being on our show today, and the folks can reach you just by going to the Stan Harley Market Letter. What's the website that you like to see? You have an email address or something that they could request?
It's harleymarketletter.com, Larry, harleymarketletter.com.
Okay. Well, thanks for being on, my friend. I enjoy having you. I like talking to you. It reminds me of the old days back there at the old McCulloch Oil Building there in West LA. But that seems like a millennium ago. You know that? I mean, it was 50 years, for God's sake. I mean, it was a long time. But hard to believe we've been doing it for so long, right, pal?
Father Time marches on, Larry.
Yeah, well, we were lucky. We found something we like to do. We've been enjoying it ever since. Stan Harley, thanks for joining us, my friend. We'll have you on next month around that July time that you're looking at, okay?
My pleasure. Thank you.
Thank you, buddy. We'll talk to you later. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey, we're back, folks. We remind you that we do have a grain report coming out today at 12 o'clock. It's going to be a big one, as we've shown you from the work from good friend Rich Anderson. We are looking at markets that usually go somewhere between 30 and 40 cents in soybeans, either direction, so it's a crapshoot, so be very, very careful. Take a close look at it. The other thing is that gold, we've had virtually no rally in gold here over the last 3 weeks. The biggest rally, I think, has only been $7 or $8, so my assumption is we're probably getting ready to have a good rally here in gold, but the price objective we're looking at certainly points towards 1220 or so, and we're trading at 1252 right now in the gold market. So I would hold off on buying any gold, and platinum certainly looks like it wants to go down to the 837 level without any trouble at all. So those are just some of the ones that we're keeping an eye on. So take a look at it, and keep your buying in the Deutschmark down to a little bit of a problem, and we'll see it. Do the gold stocks lead to metal? Tucker, I don't really know the answer to that. I don't don't really follow that very much. The fellow who will answer that for us, we'll have him on next week, and that's Arch Crawford. We'll have Sam Crawford as our guest from the Crawford Perspectives on next week, and he'll give us that answer because he's followed gold, well, as long as I have, but he's followed the gold stocks. I have not really done it. You know, there's one other guy here, Tom O'Brien. Tom Sr. would certainly know that answer when his show comes on. Give him ask him, ring his bell, see, because he knows that stuff. He would give you a pretty good idea of it, but I really don't know if that's the case or not. It would be a good thing to know. I watched that XAU, but that really doesn't tell you very much. So that's it. You know, he likes you. This is good. He likes everybody. Well, there's one person he doesn't like, but anyway, that's neither here nor there. But he will give you the answer because he's a super stand-up guy. That's for sure. As is the whole family and the whole TFNN family. So live every day in an attitude of gratitude. Have a wonderful weekend, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!